Hey there, and welcome. Ever wonder what the smartest money in the market is really doing? Well, today, we're pulling back the curtain on the Pakistan Stock Exchange. We're going to dive into a data driven analysis of the most popular stocks held by the country's absolute top institutional investors. Let's get right into it.
So this is the big question, isn't it? If you want to know where the market might be heading, a pretty great place to start is by looking at where the big, professionally managed funds are putting their cash. And today we get a little peek inside the portfolios of the pros.
Now, you might be wondering, how do we know all this? This isn't just guesswork. The source for our explainer actually analyzed the portfolios of the 10 largest and most consistently profitable equity funds in Pakistan. So we're just looking at the stocks that they all seem to agree on the most. Okay, let's not waste any time. We're going to kick off our countdown with the company that lands at number 5 on this very exclusive list.
All right, kicking things off at number 5, we have Hub Power Company, or HUBC. They're a huge player in developing and running power plants in Pakistan. And here's the key part. This stock is held by 5 out of the 10 top funds we're looking at. So right off the bat, half of these major funds see some serious potential here.
So let's pop the hood and look at the dashboard for HUB. It's got a solid market cap of 88 billion rupees, a really low price to earnings, or PE, ratio of just 4.41, and a super healthy return on equity of 39%. That's a measure of how much profit it makes from its shareholders' money. These are some strong fundamentals for sure, but there's one number that really jumps off the page. 66%. Get this, that was Hub's net profit margin back in 2021. Now, to put that into perspective for you, turning 2/3 of your revenue into pure profit is, well, it's almost unheard of, especially in the energy sector. According to the source, that is an exceptionally high figure that just screams incredible operational efficiency. Sliding into the number 4 spot is a global software giant, Systems Limited, or SYS. And just like HUNB, it's held by 5 out of the 10 funds, which shows it's got some serious institutional backing. Now, the numbers for Systems tell a totally different story. This is a growth-focused tech company, and you can see that reflected in its PE ratio of 40, which the source points out is pretty high. But, investors are clearly willing to pay that premium for its performance. And that includes a really strong return on equity of over 31%.
So, what's the really crucial number here? It's all about financial stability. A current ratio of 3.49 is just excellent. In simple terms, it means Systems has almost 3.5 times more short-term assets than it has short-term liabilities. This shows it can easily cover all its immediate bills, a key sign of a really well-managed company.
Okay, cracking our top 3, we've got the Oil and Gas Development Company, OGDC. And you can see the consensus is growing here. 6 out of the 10 top funds are holding this stock. And really, it's no surprise. By market capitalization, OGDC is the single largest company on the entire Pakistan Stock Exchange. And wow, the numbers really show its scale. Just look at that market cap, 356 billion rupees. Its current ratio is a massive 6.4, which points to just immense liquidity. But the most eye-popping number on this entire dashboard has to be its price-to-earnings ratio. Just 3. A PE ratio this low is extremely rare, especially for a company of this size and profitability. It basically means you're paying very, very little for a whole lot of earning power. The source suggests that from a pure valuation perspective, this might mean the stock is significantly undervalued. All right, we've made it. It's time for the final showdown, the 2 most popular, most widely held stocks among Pakistan's elite fund managers. This is where we see the strongest agreement, the biggest conviction. Let's see who takes the top spots.
Coming in at number 2 is another absolute giant in the energy sector, Mari Petroleum, ticker symbol MARI. The conviction here is really strong, with a significant 7 out of the 10 funds we're tracking holding this stock in their portfolios. And when you look at Mari's dashboard, you can totally see why it's so popular. A huge 230 billion rupee market cap, a strong return on equity of 27%, and a pretty reasonable PE ratio around 7. But one of these metrics is, well, it's simply off the charts. And that would be its earnings per share, or EPS. This is the company's total profit, just divided by the number of shares out there. At 235 rupees, Mari Petroleum's EPS is by far the highest of all 5 companies on this list. It represents incredible profitability on a per-share basis, and that's a massive draw for any investor.
And now, for the #1 most popular stock held by Pakistan's top funds, it's Lucky Cement, or LUC. The level of agreement on this one is just staggering. An incredible 9 out of the 10 funds that were analyzed hold this stock. That is near unanimous conviction right there.
So here are the vitals for the top pick. We've got a solid 190 billion rupee market cap, a decent current ratio, and a respectable EPS of over 43 rupees. Its PE is a bit higher at over 12, which the source does note feels a little on the expensive side, but clearly that is not stopping the pros. So the most crucial point about Lucky Cement isn't really found in a single performance number, but in the consensus. 9 out of 10. Let that sink in for a second. The fact that almost every single one of these top-performing funds has chosen to invest in this company, it just speaks volumes about its perceived stability, its market leadership, and its future prospects. So when we put the top two head-to-head, it's a really fascinating comparison. On paper, you could argue Maari Petroleum has stronger performance metrics, a way higher EPS, a lower PE ratio, and a much better net profit margin. But Lucky Cement wins on that one key factor: overwhelming popularity and consensus among the top funds. So, after looking at the top 5, what can we take away from all this? And maybe more importantly, what's the crucial warning that comes with this kind of information? Let's break down the final thoughts. So what's the big picture here? Well, first, it's pretty clear these top funds are targeting companies with proven financial strength, things like high profit margins and healthy liquidity. Second, the list is surprisingly diverse, right? It spans from industrial giants and energy leaders all the way to a top tech company. And finally, it shows that popularity doesn't always mean a stock is cheap. With companies like Lucky Cement, it seems the pros are willing to pay a premium for what they see as quality and consensus.
And that brings us to the most important point of all, and this is a direct quote from the source of this analysis. This explainer is for your information. It shows you what the big funds are up to, but it is not investment advice. So the real takeaway here is to empower yourself. Do your own thorough analysis, and then you decide.